I have your attention, please? We're going to start the meeting. I'd like to thank all of you for coming, as opposed to last time with the monsoon rain that we had. So it's nice to see all of you. We have a lot of new guests and some new members here tonight. I'd like to remind you to please turn off your cell phones and put them on mute so we don't disrupt the host. In order to get things started, I'm going to ask Arthur or Canada to come up and make our prayer for us tonight. That word's too long for me.
I want to thank everyone for coming out in this nice sunshine tonight compared to last week. A lot of them couldn't make it. I didn't know how bad it was. I talked to some of the members here. It was very, very bad. So we should be thankful that they survived to come here again. We should all be very thankful for what we have around us.
If you'd all please stand for the Pledge of Allegiance to the flag. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. At this time, I'd like to call up Carlo Corzine, our new Vice President. Carlo wants to make an introduction and speak to the club a little bit.
Just so everybody gets to know each other a little better, who do we have visitors today? And if you're a visitor, would the person that invited you please stand up and introduce them?
Roland Perry invited Jamie Kritika from Chicago.
And Roland Perry is a new member, and his first meeting as a new member, he's brought a guest, which is very nice.
That's not work. I invited Benny Sarumi.
Benny? Benny, stand up. Hi, Benny. Any other guests?
Dr.
Artie invited me. Artie first. Great. Scott Furman. Good deal. Any new members? Do we have any new members today?
George?
Well, Rick.
Yes, hopefully.
Listen, if you would stand up, not just say, tell us your name, because we all want to know who you are, what you do, just to give us like a 1 minute if you don't mind.
My name is Kevin Cordona.
Hey, hold on. Everybody give attention, please.
My name is Kevin Cordona. I'm 22, and I'm a student finance at FAU. It's my first meeting.
Very good, thank you.
Welcome.
Okay. So now I'd like to introduce Peter Hardigan from DSS, Document Security Systems. He's our host tonight. Let's give him a hand. Peter, you'll be putting on a presentation for us tonight.
Yes, thank you all for coming. I apologize, I think I've said about 5 times now about the overhead. Actually, the truth is, there wasn't a Navy failure. It's just we have some existing litigation with the projector company, and I just couldn't do it. So I thought it'd be infringing some patents. It's obviously, that's a joke, but the story of what we're doing relates to making money off of intellectual property and primarily patents. And I guess this is something, a relatively new asset class in the public markets, but it's something that I and the other partners at Lexington Technology Group have been doing for a long time in the private market. And what I wanted to do tonight is to give you a sense for what we're doing with document security systems, which for us is sort of our third investment. And it's the first time that we've come under the public eye, of course, because as a public company, we're going through all the SEC process and everything to go forward as a combined entity. So how many of you have ever invested in a company that most of their money should come from intellectual property? I was going to say, probably all of you have. If you've invested in tech, if you've invested in biotech, If you've invested in some energy companies, you probably all invested in companies who were primarily IP companies. And there are a couple examples that I'm going to jump to a slide that looks like this. Which it looks like a consultant made, and I was a consultant at one point in my life. It's page 10. And the reason for doing this, just as an introduction before I tell you anything about me, is to talk about kind of the state of the IP market in public companies, and to think about some business models. And I think it'll just give you a sense for, before I dive into, we're doing this, this, and this, it's kind of, you know, who else is out there?
Hey, Peter,
Yeah.
you might want to tell everybody the page numbers because you can't see them.
Sure.
So you know where you're at.
It's page number 10.
And in the book, it's up in the right-hand corner, very light.
Yeah, I was. So.
They're very, very light on the top.
It's very light in the top corner. All right, so a couple examples of IP companies that are really explicitly IP companies are Rambus and Qualcomm. These are companies that have no operations, basically. They invent things and they license them. And they've been very successful companies doing that. These are intellectual property companies. There are companies on this page that are more focused on pure play intellectual property. Acacia Technologies and Wyland. Acacia Technologies is trades on the NASDAQ. I think the market cap, depending on the day, is $1.4 billion or so. They've been around for about 10 years. Wyland's on the TSX. The market cap's around $500, $600 million, depending on the day. These are companies whose sole business model is to help companies enforce patents that they own. And what that means is basically, it's kind of like working with a contingent law firm. You give Acacia or you give Wyland your intellectual property rights, and they go out and they make money with it. And their model is kind of one size fits all. Basically, they take ownership of the patents, and they'll give you 50% of the profits after their costs. And this is a business model. These are both well-run companies. They've been fairly consistently successful. They've had their ups and downs. But in terms of giving you sort of an intro view into this space in the public markets, these are companies that you can always kind of refer to and get a sense for benchmarking what's going on. These are companies that are called non-practicing entities, which means that, like Rambus and Qualcomm, they don't actually make anything. But in this case, they haven't invented the IP either. They're just service providers who help people who have patents to make money with those patents. So Rambus and Qualcomm, I invent it and I license it. These companies, you invented it and I license it for you. And when I say licensing, it's very hard to get a company, a corporation, to pay you anything outside of initiating litigation. It's a sad fact, but it's true. Sometimes if you approach a company and ask them to engage in a licensing transaction with you, they will literally say, fine, but you need to sue me first. Because there are a bunch of factors like insurance premiums that they've already paid for, and just the fact that that's how they can get it approved through the corporation. So for better or for worse, probably for worse, I think all of us would like to see less litigation. I think until the way the market is set up in this industry changes, most of these disputes have to be mediated through litigation. And it's strange too, because you can have patent portfolios that literally an entire industry uses, like one of our investments, Bascom Research, which I'll talk more about. You know, there are dozens of companies that are using these patents. And in order to get anyone to pay you for them, you pretty much have to drag them into court. So Acacia and Wyland, well-established, diversified companies. And there are companies called Vernetics and Bringo. These are more narrowly focused patent companies that have one or two portfolios and are a little bit more volatile and are very focused on winning at trial. And I think what we're doing is a little bit different than both of these models. What we're doing is building a diversified portfolio of investments in operating companies, so companies that are producing something. where there is a significant opportunity to make money with their IP, their patents typically, using world-class managers, people who've made hundreds of millions of dollars in different business models, making money with patents. So who are we? We're actually taking a step back. Who are we? What are the two companies? And this is page 4 in the presentation. Very dim page 4. So Lexington, I'll start with, I'm the Chief Operating Officer of Lexington. I'm one of the 2 partners at the firm right now. The other partner is Jeff Rinaldi, who's someone that I've known in the industry for some time. We also have a couple board advisors, one of whom, Warren Hurwitz, raised a very successful private equity fund called Altitude Capital Partners that's made about $650 million in patent monetization. I'll talk more about Jeff and my background, but suffice it to say it's a group of people with a lot of experience making money with patents. We're a private company. We have 2 investments, and we have money in the bank. And DSS is our 3rd investment, essentially. DSS is an operating company with significant opportunity to unlock potential of its IP portfolio in 2 distinct ways. One, through disputes that they have. So in other words, there are people that are using their patents, and we need to help them make money with it. And 2, they've got a very exciting new product that they're launching that is patent protected, and where there's an opportunity for them to grow and for us to share in the profits of what they're doing there. DSS, historically, has been a technology innovator in a relatively discrete space. What they're very good at is making it extremely hard to copy or scan a piece of paper with information on it. Yeah, actually, the founder, Ralph Wicker, who is the father of the current VP of R&D, he was trained by the U.S. government for one reason or another to counterfeit Korean and then Vietnamese banknotes. In the 1980s, it's kind of a catch-me-if-you-can story. In the 1980s, he started a company that was based on patents that he had to prevent counterfeit. And he actually ended up in litigation with the U.S. government, which takes some courage, in the 1990s. He was awarded $3 million for infringement of his patents by the U.S. government, and then didn't accept that offer. There was a mediation, went to trial, and the judge in the trial overturned his award, overturned his patents, which is, again, something that can happen if you go to trial with someone who's much more powerful than you, especially a sovereign nation. His patents were overturned. He ended up with a tax assessment for $3 million that bankrupted his family and the company, and he died shortly thereafter of a heart attack. And this is, sadly, a story that happens all too often with inventors who develop something that they can't take to market, or where somebody else has, kind of eaten their lunch, if you will, in the marketplace. DSS has had several generations of technology where they've been unsuccessful in being able to get the full value of their intellectual property. And it's because the organizations that use their IP without authorization are sovereign nations and some really big companies. They did engage in litigation with R. Donnelly in 2002 and have a license agreement that came out of that. But in general, they're a small company up against huge companies, and what they need is somebody to help them to unlock the potential of their IP, especially with the new product that they're developing, which is a digital technology to prevent counterfeit, which I'll talk more about. DSS employs about 100 people in Rochester, New York, and San Francisco. It's a real company with about $17 million in revenues. It's very close to break even at this point, and our goals for DSS are to get it to break even, help it launch its new product, and help it to make more money off of its patent portfolio. So this is a traditional investment for Lexington, and based on our stage of development, this is going to turn into a merger of equals, given the relative value of the two entities. And the next page, this slide can be updated. We actually announced yesterday that we have a record date for a merger meeting. Basically, 17th, this Friday, is the date, the record date for a merger that we've been working on since 2012. And we're expecting a vote on June 20th and for the merger to close by July 1st of this year. And this is a significant milestone for us. We've had a very long process through the SEC with the usual things that any of you have been through the process. The merger is going to result in a company that has about $8 million in cash in the balance sheet, 3 ongoing litigation opportunities that could have significant upside, and it's approximately a merger of equals. There are going to be about 52 million shares outstanding on a fully diluted basis. There's also a provision in the agreement where my shareholders, Lexington shareholders, get 7.1 million escrow shares if the stock trades above $5, and the stock today is trading at about $3. The stock trades above $5 for 40 out of 90 trading days in the next 360 days following the merger. So basically by July 1st, 2014, my investors get this additional sort of 40% equity coverage. So what this will tell you is that we're very focused on meeting that characteristic, and we're doing whatever we're executing a plan that we think will get us there. And I think this is an illustration of kind of where we are today and where we expect to go, just on a very, just based on the stock price. The combined company is going to be run by Lexington executives. Our CEO is going to become the CEO of the combined company. I'm going to be the COO of the combined company. This is the next page, page 6. Back to our background. Jeff Rinaldi, he was person number 40 at UUNet. I think he was person number 50 at Concentric Networks, for those of you who remember in the 90s, 2 big internet successes. He got into this space because he ran a corporate VC fund that had an investment called Image Expo, where under NDA they provided the keys to the kingdom to Microsoft. And Microsoft said, thank you very much, put it in their next product launch. And it led to litigation where his investment company, Image Expo, won $62 million from Microsoft. So he got into this business because he was trying to develop companies and understood the competitive dynamics when you work with companies like Microsoft. Since then, he's deployed about $12 million of investor capital and returned about $175 million in awards through a series of investments. So he's someone that has a really tremendous track record of working in a repeatable fashion, making money with patents. And there's a lot of people who've made money once or twice. Maybe they've been lucky, maybe they were good. It's very hard to do this over and over and hit multiples that investors will pay attention to. And that's what we're focused on. My background is, I was a strategy consultant. Probably to my family's dismay, I'm not a lawyer. I have an MBA, and I got into this business because I was helping pharmaceutical companies license their late-stage pharmaceutical compounds years ago. I was part of a strategy consulting firm called Mainspring that went public in 2000, and IBM bought out the following year. And I worked on the sell side of the business, I worked on the buy side of this business. My last role was, I was the head of investment management and the chief financial officer of a company called IP Navigation, which has historically made about $600 million engaging in patent monetization. IP Navigation is a close relationship for us. Our first investment came through them, and IP Navigation is actually managing that investment for us. And it was recently discovered by somebody on one of the message boards that Eric Spangenberg, who is the CEO of IP Navigation, who is a heavy hitter in the space, is our second largest investor. So there's a lot of smart money, people who know the business and have been doing this for a long time, are invested in us and have a lot of skin in the game in what we're doing. The DSS investment management, Bob Bizdick, who's the current COO, is someone who we have kind of running the shop and executing on both sort of a turnaround plan or a financial improvement plan and developing and delivering a new digital product. Someone we have a lot of confidence in, who is a successful manager of a printing business that DSS acquired a couple of years ago. And Phil Jones, the DSS CFO, is going to be our CFO. And we have a very good relationship with these guys, and we have a lot of faith in their ability to run the traditional operating company. So it's, we've had enough time to work out the kinks without going too far, and we're very comfortable with the operating relationship we have with DSS management. I think in the interest of time, I'm going to jump ahead to slide 11, which looks like this. So I mentioned before that Lexington is bringing in 2 investments in addition to cash in our pipeline. Those 2 investments, Bascom Research and Virtual Agility. Bascom Research is a litigation, basically, without getting into too much technical detail, the claims in the Bascom technology say you create a big database directory of linked relationships, and it tells you those linked relationships connect a bunch of different objects on a network. And this is technology from 2001 era that solves what's called a distributed data problem. And that's as far as I'll go with it. It's fundamental to what Facebook and LinkedIn, how they are set up, what the provision, basically what they offer to end users, and how they make money mining data and getting advertising rates that are above industry average. The case is against Facebook, LinkedIn, and some other smaller defendants who are still on this page. This presentation is actually a little bit old at this point. We had already licensed Broadvision at a 4% royalty rate, and today we announced, earlier, actually just before this meeting, we announced that we have a second licensee in this case, Jive Software, at a 5% royalty rate. So we have we're developing a very strong track record of licensing this portfolio, and we're doing this before a very important event in the case called the Markman hearing, which is coming up in October. This litigation world, when you are investing in companies that are engaged in trial, and that trial is going to be something that really moves the stock, it's kind of like a biotech company. And the way you can think about the Markman hearing, it's kind of like the phase 2 milestone. And in this business, if you get your phase 2 milestone, you should be capitalized for the rest of the way. And there's a lot of detail behind that, but that's, if you're doing your job, you're making money, you're getting a good return if you get through phase 2. There isn't another industry that works that way. I would think of the phase 3 as being the trial, and the FDA approval as being if you go on appeal and you get a huge award. Facebook and LinkedIn, these are both significant numbers that they're facing in terms of damages. I think what you'll see with this case, this is a case that's being personally handled by Eric Spangenberg, the gentleman I mentioned before, and IP Navigation, the $600 million they've made, 64% of that has come within the first 9 months of initiating a case, a trial. And what that means is that 64% of the money has come before the Markman hearing. And the way this works is you establish a royalty rate, you file additional cases once you've established the royalty rate, and then there are some defendants who have significant exposure that you're going to have to mediate through trial. And so what I think you'll see with this case is adding additional defendants over the summer, having additional licensees, establishing a more robust royalty rate, income coming into the company. And then we're building a diversified company with multiple investments, but you see 3 on this page. And what's happened with other companies that have exposure to single patent portfolios, like Veringo, Vernetics, Parker Vision, other companies you might have heard of, is that the Markman is a point in time at which there's significant movement in the stock price. And that's something that if you just study if you look for Markman and you look at the stock movement around that time frame, you can see considerable run-ups in the stock prices of companies. So in the near term, we're likely to behave like that. In the long term, we're going to be much more diversified and not exposed to any one case. But at this stage in our development, I think you can expect to see income coming in and a lot of activity around the stock in October when this Markman hearing is going to happen. And this portfolio also, very importantly, very broadly infringed. We're keeping 60% of the economics in this case. We have 3 other parties that are getting paid in this case. The inventor, who's not an equity owner, is getting 10%. Contingent counsel and IP Navigation, who's running the case for us, they're collectively getting between 35 and 40% of the economics, depending on the stage of the case. So we're keeping a lot of the economics in this. And that's something that we've put out there because a lot of companies are not very upfront about how much money they're keeping when they do this kind of work. Virtual Agility is a case against Salesforce.com and Salesforce's customers. This is in the Eastern District of Texas. This case relates to, basically in 1998, Virtual Agility created a product and filed patents around making it simpler for people who don't have IT experience to do coding. Very far ahead of the market. In the last couple of years, Salesforce.com has actually, their advertising says Salesforce, and there's this red circle with a line through it that says no code. So this is a central element of what their marketing is telling people, that if you use Salesforce, you don't need coding specialists to update your software. And this company historically has made about $10 million. Their customers have been customs agency, other government agencies, foreign municipalities. And we think that this is a great case. Again, on the economics, we have a multiple of our return. We're putting in up to $2 million in this company, and we're going to get a multiple of that money back and then keep participating. So with both of these investments, we have very favorable economics. I should have mentioned in the Bascom case, we spent $2 million to acquire this asset. We're going to invest probably $2.5 million end-to-end in running the case. And for a defendant like Facebook, the damages claim is well in excess of $250 million. What you actually take home in a settlement is a different question. When you take the money and how much money you take is something that's subject to the analysis that you make when you go through this. If you were going to sell your drug compound at phase 2, it's not worth what it would be worth if you're on the market. If you sell it at phase 3, it's worth slightly more. And that's a decision-making process that we're going through with all these defendants.
Hey, Peter, can I ask a quick question?
Sure.
Talk about Bascom for a second. And you've got Jive and Broad Vision that have already, in a sense, capitulated. Right? The 3 corner defendants here are Facebook, Novell, LinkedIn. Does it behoove you to get one of those to capitulate so that the other ones do? And if you do try and get that one to capitulate before your Markman day, will you do it at a lower royalty rate? In other words, you go to 2% for Novell, and then maybe LinkedIn and Facebook capitulate and say, look, if Novell gave up, we probably ought to too because we took Novell's stuff. You know what I mean?
Sure, I think a couple
things. Is that part of the
things.
economics of this deal?
Yeah, first thing is, these are not the only defendants that are going to be in the case. We're going to file on a number of other defendants. So this is just the first set of defendants. So there are other significant defendants that will come into the case. There are other companies like Broad Vision and Jive that are, smaller economic value. The most important thing with the smaller defendants is that you're establishing a rate. I think of it like if you do a condo conversion, you buy the building, you fix it up, and when you rent out the first small apartment like we have with Broad Vision, with Jive, you have a sense of what the rent is going to be in the whole building. Now, when you sell the penthouse, it's a much bigger space. The economics are slightly different. In this case, companies like Facebook and LinkedIn and some other big companies that haven't entered the case are, getting the whole floor and at potentially a different rate. But to answer your second question, it depends. If you, it depends on how well capitalized you are. It depends on your view of how strong you are in the case with particular defendants. But if I settled, hypothetically, if I settled LinkedIn for $20 million, it would set a very strong precedent for you will not exit this case for less than that amount. And that would be independent of whatever the royalty rate was.
Right.
So you can take the royalty rate and you can think about if you got that royalty rate on defendant X, it would be a huge number, and you'd probably be willing to set maybe a little bit less